Hello students, let us work out the fourth problem today in fund flow statement. This problem has come for 2008. From the following information, prepare fund flow statement for the year ended 31/3/7. The balance sheet is given in terms of lakhs. We have equity share of rupees 10 each. Last year we have 10 lakh, current year we have 15 lakh. There is an increase in equity share capital which indicates the equity shares are issued. New equity shares are issued to the extent of 5 lakh. It will come in FFS. Preference shares of rupees 100 each, 50 paid. That means face value is 100 but 50 is paid and remaining 50 is unpaid. So last year it was 5 lakh, current year it's nil. It means preference shares are redeemed. Preference shares are repaid. Students, preference shares cannot be redeemed if it is partly paid. But in our problem it is redeemed. But it cannot be redeemed if it is partly paid. So what has to be done? Convert the partly paid preference share into fully paid preference share. And then it can be redeemed. So students, preference share face value is 100, 50 rupee is paid, 50 rupee is unpaid. Means half is paid capital, remaining half is unpaid capital. So 5 lakh is paid, remaining 5 lakh you should collect from the shareholder. So ask the preference shareholders to pay unpaid capital of 5 lakh. So present 5 lakh, called up capital 5 lakh, then it becomes 10 lakh. So preference share redeemed will be 10 lakh. So in our problem, preference shares are redeemed. It will come in FFS. Share premium 0.25 means 25,000. Current year we don't have. Let us discuss this in working note. CRR, that's called capital redemption reserve. Last year we don't have, but current year we have 5 lakh. Ignore this. But however, it will come in ledger accounts. We will see the working later. Students in 4th semester BCom, advanced corporate accounting, you had a chapter called redemption of preference share. So in that particular chapter, how much you take from GR to pay preference share, so much should be transferred to CRR. I repeat, how much is taken from GR, general reserve, so much is to be transferred to CRR. So here CRR we have 5 lakh, it means 5 lakh is drawn from GR. So we take 5 lakh from GR and pay preference share. That amount you should transfer to CRR. General reserve last year it was 10 lakh, current year it is 7 lakh. So we have to prepare general reserve account. Then last year profit 2,75,000, current year profit 3 lakh. Current liability 7 lakh, 2 lakh, it will come in statement of changes in working capital. Then we have provision for tax. Don't treat as current liability because we have an adjustment relating to provision for tax. So you need to prepare an account. Plant at WDV last year 15 lakh, current year 18 lakh. So you need to prepare plant account. Then stock, debtor, cash, all the three is called current assets, will come in statement of changes in working capital. Miscellaneous expenses, you just treat like preliminary expenses. So last year it is 1 lakh, current year it is 4 lakh. Means you need to prepare an account because we have an adjustment relating to miscellaneous expenses. So it will come in miscellaneous account. So till now you have to prepare 5 accounts. What are they? Number 1, general reserve account. Number 2, provision for tax account. Number 3, plant account. Number 4, miscellaneous expenses account. Then we need to prepare adjusted PL account. So let us look into additional information. Additional information, students, all adjustments will come at 2 places. During the year, company paid 2 lakh as equity dividend and 56,250 as preference dividend. So both the dividends will come in adjusted PL account and FFS. The company redeemed means repaid the preference shares at a premium of 5% after making a call of 50 rupee per share to make the share as fully paid. Students, as explained earlier, preference shares can be redeemed only if it is fully paid. In our problem, it is redeemed, but it is partly paid. So what has to be kept in mind is you have to convert preference shares into fully paid. So collect 5 lakhs. Already 5 lakh is paid. Now current 5 lakh, totally 10 lakh you should redeem. Already paid 5 lakh, called up capital 5 lakh, so you get 10 lakh is redeemed at a premium of 5%. So 10 lakh into 5%, you get 50,000. So total redemption of preference share will be 10 lakh 50,000. So you need to redeem 10 lakh 50,000. It will come in FFS. Miscellaneous expenses include 5 lakh rupees share issue and other expenses paid during the year. As I told, all adjustments will come in two places. So 5 lakh will come in miscellaneous expenses account and FFS. During the year, one plant whose book value was 1 lakh was sold at a loss of 25,000. So 1 lakh rupee plant is sold at a loss of 25,000. So loss is 25,000. Then how much will be the sale value? 75,000. So 1 lakh minus 25,000. Sale value will be 75,000. So it will come, sale 75,000 will come in plant account and FFS. Loss will come in adjusted PL account and FFS. And the company purchased a plant of rupees 6 lakh will come in plant account and FFS. And then a sum of rupees 3 lakh 50,000 has been provided for taxation will come in plant account and adjusted PL account. So remember student, 3 lakh 50,000 is not tax paid, it's tax provided. You provide the tax amount after out of profits. You provide the tax 3 lakh 50,000 out of profits. Student, this is the working note. See students, redeemable preference share capital paid is 5 lakh. Add the call money unpaid capital of 5 lakh. Then total preference share will be 10 lakh. As mentioned in the question, fully paid is 100, but 50 paid. Then another 50 you have to pay. So that is per share value, this is total value. So 5 lakh is already paid, plus another 5 lakh, you get 10 lakh. Add share premium 50,000, that is 10 lakh into 5%, 50,000. The shares are redeemed at a premium of 5%. So total preference share capital redeemed is 10 lakh 50,000. Now students, you should repay 10 lakh preference capital. You should repay preference share premium 50,000. Where will you get money? From where you can take money? So to repay 10 lakh, where you got the money? So you can make use of new equity capital, and remaining 5 lakh you can get it from general reserve. It's just simple like students. You want to buy a jewel, where can you get the money? Where can you take money? Like that, 10 lakh you need to repay preference share. Where can you get that money? So you can take the 5 lakh amount from new equity share, and remaining 5 lakh you can draw from GR. How much you take from GR, so much you should transfer to CRR. That's why in the balance sheet we have CRR 5 lakh. So 5 lakh is drawn from GR, 5 lakh is drawn from new equity capital. So total we got 10 lakh. Next you need to pay 50,000 rupee premium. Where can you get this 50,000 rupee? Where can you take this? Existing old premium in the balance sheet 25,000, you can take that premium to repay this premium, and then another 25,000 you can take from GR. So totally you got 50,000. So student, this is a statement showing schedule of changes in working capital. Stock, there is a decrease in stock of 3 lakh. So working capital will decrease. There is a decrease in debtor 6 lakh. So working capital will decrease. There is an increase in cash of 1 lakh. So working capital will increase. Then current liability decrease of 5 lakh will result in increase in working capital. Then working capital of last year 15 lakh, of current year 12 lakh. So last year it's 15 lakh, current year it's 12 lakh. So working capital, there is a decrease of 3 lakh. So it's simple, already we have done many problems on this, so I didn't go much deep. General reserve account. General reserve is a liability, so we go for buy balance brought down 10 lakh. Then 5 lakh is transferred to CRR. As I told you, 5 lakh is used to pay preference share. So 5 lakh. Then 25,000 is taken to pay premium. So 5 lakh is taken for capital. 25,000 is taken for premium towards preference share. Then closing balance 7 lakh. So total 12 lakh 25,000. So you get balance 2 lakh 25,000. This is called GR transfer. So GR transfer is 2 lakh 25,000. This will come in adjusted PL account. Then since some adjustments are there related to miscellaneous expenses, so we need to prepare miscellaneous expenses account. It's given in asset side. So to balance brought down 1 lakh. We have share issue expenses given in the adjustment 5 lakh. So we have paid that expenses, debit all expenses and losses. So you get total of 6 lakh minus closing balance of miscellaneous expenses 4 lakh. So miscellaneous expenses written off 2 lakh will come in adjusted PL account. So students, next you need to prepare provision for tax account. It's a liability. So buy balance brought down 3 lakh. Then we have buy PL account 3 lakh 50,000 given in the last adjustment. Income tax provided during the year. It's not paid during the year. So you provide the amount to pay tax out of profits. So in PL account it will come in debit side. Here it comes in credit side. Then take the closing balance of provision for tax. Total 6 lakh 50,000 minus 4 lakh. You get IT paid 2 lakh 50,000. It will come in FFS. And 3 lakh 50,000 is called IT provisions made during the year. So 3 lakh 50,000 indicates profit kept aside to pay the tax in future. But currently tax paid is 2 lakh 50. So 2 lakh 50 is a tax paid immediately. 3 lakh 50 is a tax to be paid in future. So 3 lakh 50,000 will come in adjusted PL account, and income tax paid 2 lakh 50,000 will come in FFS. Next, plant account students. It's an asset. So to balance brought down 15 lakh. Next we have to purchase of plant 6 lakh. Then we have sale of plant 75,000, that is 1 lakh sold at a loss of 25,000. Then closing balance 18 lakh. So total 21 lakh minus the credit side you get 2 lakh. So 2 lakh is called sale. Now students, adjusted PL account. So first you take GR transfer 2 lakh 25,000 which we found in GR account. Provision for tax 3 lakh 50,000. So 3 lakh 50,000 is paid, is been provided out of profits. Then loss on sale of plant 25,000. Then we have miscellaneous expenses written off 2 lakhs. Equity dividend paid, preference dividend paid, and we have current year profit. And take the last year profit. So total of debit side minus credit side, FFO, you get 10 lakh 81,250. So fund flow statement students. Sources indicates receipt, application indicates payment. So we have issued equity share 5 lakh. Sale of plant we received 75,000. Sale of plant again we have 2 lakh. So all these three indicates receipt of cash. Decrease in working capital. So working capital decreases, we arrange loan from bank. So we receive 3 lakhs. We don't have any discount received, but we made a call money from preference share 5 lakh. So we asked preference shareholders to pay 5 lakh in order to convert into fully paid share. So we received 5 lakh from preference share. Then fund flows operation 10 lakh 81,250. So we got funds from operation. Then redemption of preference share, we have repaid. So application indicates payment 10,50,000. Purchase of plant 6 lakh. Increase in working capital we don't have. Dividends paid, both equity dividend and preference dividend, 2,56,250. Then miscellaneous expenses paid, that is share issue expenses 5 lakh. Then income tax paid 2,50,000. So all payments comes in application side and all receipts comes in sources side. So you get a total of FFS 26,56,250. Okay students, kindly work out. We will see in the next class. Thank you.